Today I want to share with you Twilio and Chegg's Q3 2020 earnings. Both company beat expectation, but the share price is still falling for some bizarre reason. Let me share with you and explain to you what has happened in earnings, why they are falling, and what the future holds for these two companies. So stick with me on this video and I shall share my views. Hello, welcome back to Family Investment. It's been a really bizarre week. COVID-19 is going up and all the stock prices are coming down. Despite the fact that these two companies has been really good on the Monday's earnings to kick it off, but yet the share price for Chegg has fallen by 4% in the after hours and Twilio has fallen by 1 to 2% for the future opening tomorrow. So what's happened? So before I begin, I just want to give a shout out to my partner and sponsor, Stockcard.io, investment tool that I use on a daily basis to do filtering to find my next big stocks and also the information on investor sentiment and details that I can collaborate with on that tool. Okay, so let me start with Twilio. Twilio was expected for a -3 EPS, -3 cents, meaning they were targeted to be making loss, but however, instead of -3, they got +4 on the EPS earnings, as you can see on the chart. And the quarterly sales grew from 400 million to almost 448 million, so about 450 million. So they plus another 50 million more in this quarter compared to the last smashing quarter. So I thought it was pretty good trying to hold up for what they've done. So the Wall Street analysts and investors and institutional investors can be brutal at times. So because they beat the EPS by 0.9 before, they were hoping them to beat it again. But we need to sometimes, as personal investors like us, we need to roll back and see, it's only 3 months since they've done well. So they need time to recoup. They need time to expand the architecture. They need time to make software changes. So we do need to give them time. So as a long-term investors, you need to see it that way. If you look at the quarterly total revenue, it's 52% year on year, meaning they will beat last year's revenue by 52%. So if you see last year, the earnings sales revenue was 1.13 billion. And what they're saying is for 2020, they will make 1.6 billion, which is about 52% growth. I mean, if I had a company that made more than 10% growth year on year, I'll be happy. This is 52% year on year growth. And for Q4, end of the year's earnings, I think they put a line in the sand of 450 to 460 million. Perhaps that's why the Wall Street are not happy. They're hoping of more numbers because they just achieved 448, and the next thing is they're forecasting 450. So it's not far off. They're not growing anywhere. It's just stagnating growth. What's happened? They're not showing explosive growth like the likes of Zoom. Okay, I think Zoom's fault that's causing everyone to be so high expectation. Like I said, I was trying to value Twilio and it was pretty difficult. If you, for a $300 stock at 52% growth, and if you put in 0.2 just now, that stock is hardly worth over $100 per share. So I need to reverse engineer and see what are the Wall Street traders thinking. So at $300 at 52% year on year growth, and hopefully they achieve that next year as well, you need an EPS of 1.8. And if you divide it by 3, if you divide by 4 quarters, Wall Street are anticipating over 0.45 every quarter. 0.45. So they need to do the sales revenue of a quarter, which is 4 times what they're doing now. Great stock. Would you buy, Alex? Would you buy now? I was buying when it was about 285. It went up 310. I sold it, waiting for the earnings to come up, and I'm glad I sold it. But I think I would hold for the stock to fall further. But if I do miss the stock at 250, 240, then that's it. I will never catch Twilio. But I will buy at the value. I think this, among all the hypergrowth stock, I think Twilio is just way beyond its price range. And I think if you compare with Zoom is actually Zoom would be a better value compared to Twilio if you compare it head to head. So this is me. I like Twilio. I would buy it at 240, 250, but not now. I'll just see how it happens. If I miss the boat on Twilio, then that's me. I missed the boat on Twilio for generations to come. And now let's go to Chegg. Chegg has a good earnings as well. So Chegg is a business that deals with online learning, online platform, online services, textbooks, materials for college students. It's not for high schools or lower elementary schools, but it's more for college students working from home, studying at home just now, which is helping with the boost. So what was impressive was the subscriber growth for this quarter. So the subscriber growth for this quarter is 69%. So they gained 69% new subscribers. So that was what pushed the stock from 65 all the way to 80, nearing 90, 86, 90. That was what was driving it really, really hard. And with Chegg, so the EPS for Chegg came in at 17 cents against when it was 10 cents. The revenue was 154 million compared to expectation of 143 million. But the subscriber growth was the one that's really, really attractive. So Chegg has got 3.9 million subscribers, 29% growth year on year. Perhaps it might be even further. If I were to value the stock, how much would it be worth? So I've used my Graham's intrinsic calculator on this stock, and with an EPS tally with the future one the next quarter, put it at 0.2, so a total of EPS of healthy 1, whole number 1, and with a growth of 29 to 31%. And I worked it out, and the stock should be worth $97.50. As it stands, it's 83. It's attractive. So, you know, in terms of valuation, it's cheap. So Alex, would you buy this stock tomorrow when it opens? For me, because of the COVID-19 and everything pushing down, I would wait. I'll wait for it to be cheaper. You know, I'm tempted to think that Chegg is a very good value, and you know, it's really attracting me now. And because of the dip to 65. So I think I will wait for Chegg to drop up to the likes of 80, 75, drop a bit more, let it pull back a bit more. And if it does, I mean, ideally, if it pulls back to 70, I'll buy it. But then again, you know, sometimes you don't get everything you wish for. I'm sure it'll plateau at some point. I'm not sure how this will plateau. Maybe more college students using it, 3.9 million users, and you know, it's not like college students will increase year on year. I don't know how much room for growth. That's what I don't understand. Will it go internationally, helping UK students? I'm not sure. Maybe it will expand further. Maybe this international base is the one. I think it's not going up to 97 yet because of a plateau stagnating, because end of the day, college students go in year 5, year 6, year 4, they will leave, and you know, you're not going to see more and more subscribers. You're just going to see a plateau. And maybe people are not going to university because of that. So that's still something to think about on how much growth, and is there more room for higher ground. So my final thoughts, these are my thoughts for these two stocks. Twilio, great quarter, 52% year-on-year growth. I think it's overvalued, but maybe perhaps other investors with hyper growth mindset thinks that this is time to buy because there's an upside momentum and there's still no competition with Twilio. On the other hand, Chegg, I think it's undervalued, but it may be undervalued for a reason. Maybe perhaps we're thinking that we might be plateauing here, or perhaps they are waiting for other plugins or maybe international growth that can come in, and we're not sure if there's a real competition coming up. Will that pull Chegg subscriber growth down? So this Q3 own earnings and going to election, we might see a lot of volatility, we might see a lot of dips. So, you know, something for me to just share with you directly. And if you can take profit, guys. And there's no harm in taking profit. Stocks just don't go up, it will come down, but eventually in the long run it will just go on a nice incremental pattern if the US economy, Europe, global economy stays well and healthy. So hopefully to see you in the next video, closing bell tomorrow, and also more Microsoft and AMD earnings. So see you, take care, bye.